Eric Muathe for the weekend of December 20th and December 21st, 2014. Let's take a look at how the markets closed on Friday in the US. We see the US market, as far as the Dow is concerned, up 0.15. The Nasdaq was up 0.36. S&P 500 was up 0.46. Gold was up 5%, and we see that the VIX was down about 2%. For the week, we see that the S&P 500 was up 3.41%. Wow, amazing. And take a look at the Dow, which was up 3%. Again, whoa, how did that happen? And then take a look at the Nasdaq, which was up 2.4%. So if somebody told you the market could close up 2% or 3% on the major averages sometime during this week, you would have been like, that's impossible. But guess what? That's exactly what happened. So it's an amazing come off the lows as far as the market is concerned, only to close in the positive in a big way after 2 up days on Wednesday and on Thursday. So let's take a look at the charts. We begin by taking a look at the Nasdaq Weekly. You can see after trading and spending some time below the 10-week moving average, we are back above the 10-week moving average, which is very bullish. We are also back above the 10-week moving average, bullish. And we also see that the market is holding above a prior breakout level. So this breakout level was well defended by the market this past week, and the market did bounce off this line and close higher. So that's very good. And given that bounce, you just have to respect the possibility that the market continues moving higher. In fact, the summary for this video, while I was preparing for it, in my opinion, if you're going to make a mistake as a trader, you are better off taking the long side and see how things shake out. Take a look at the MACDs, and we can see that both MACD settings are above 0. All that means is on a weekly basis, the market continues being strong. Let's go to the Nasdaq daily. Number one, a couple things. We are held the 50-day moving average. We also did eventually recapture the level back above this green area, which corresponds to a high or previous daily closing highs. So what we can conclude from this is this breakout is still in play because the market has bounced back above that with a lot of force. We also come back to the level where we were watching all week here, and we had discussed the possibility of uniform activity below the line and back above it. As you can see, uniform activity below the line and back above it, that was our trigger that the market could move higher. And this trigger, if you're new to this idea, has over the last 18 months or so, the market has been coming back to this green zone with uniform activity finding the excuse of moving higher. So this is where we've been watching the last, call it 18 months, 1 year or so, and the market did not disappoint this time. And we can see as it moved back above 50 on the daily time frame, that move to by the RSI above 50, in my opinion, is the reason why we had a very big move on Thursday. Now there's some type of early sign, and what you're going to see throughout this video is the big time frames, the monthlies and the weeklies look good. The dailies kind of okay, but the hourlies are questionable. Now all that to say, since the bigger time frames always win, I think if you're going to make a mistake, probably for now, you can insist that the market is to be played to the upside and wait for the market to be down at least 1% on a daily basis or on a weekly basis. If you're going to go short, you have to wait for the market to confirm this at 1% down. Otherwise, the momentum, in my opinion, as of right now, is for the market to go higher. The prior line connecting the highs was a nice entry here, that breakout, and that corresponds with this breakout here. And you can see that if we extend that line out, let me draw that different way, bear with me there. So that line extension, we can see the market closed back at that line. If that becomes resistance, then short term maybe we are due for a pullback. Take a look at the Nasdaq hourly, and on the hourly, couple things. There's some type of information. This was the break off the highs. So it's a break here, and that channel break led to this drop. Draw a straight line from the channel break there. So we got this line, broke there, draw a straight line from there. This is where the market is trying to decide whether it can move above that. If it moves above that and trades above that line, that's bullish. If it doesn't and is not able to move above that line and finds resistance like it's doing right now, then this move back below that line is going to be bearish. So just keep in mind, it could be either way. Above that, bullish; below that is obviously bearish. Now if we take a look at the RSI seems to have been rejected at 69.1. So that rejection at 69.1 on the RSI, and I'm using a period of 14 on this one. This rejection here could be meaningful. Of course, we'll wait to see. There's another line connecting the prior lows. Just a line that I'm drawing, and let me take all that noise out. So this line can be drawn like that. The last time we found resistance on this line was actually this highs there. We've come back here and hit that line and seem to be coiling back. So that's one way of looking at the hourly RSI. And so there's also a line here, this break, which gave us the high. So this break there, here, which gave us the high. Now we just need to draw a straight line from there. You can see that on an hour-to-hour basis, this market could be telling us that this is an area where it could find resistance as far as that RSI is concerned. And just to remind you, those of you who've been following my analysis the last couple of days and weeks, we had talked about the possibility of the market bouncing. Why? Well, because we were making lower lows while the RSIs kept making higher highs. So every time the market dug lower, the RSI made a higher high, and that setup was good enough to generate this type of energy here for this mega snapback rally. So the rally, the magnitude of the rally, yes, was a surprise, but the move higher was not. All right, as of right now, we're looking at the market showing that the MACDs are above zero, and as long as the MACDs are above zero, the momentum is to the upside. Let's take a look at the Dow Weekly. On the Dow Weekly, we can see the last time the market stalled was on this line here, and we were expecting resistance, and we did get that resistance, which was the highs there, and the market did pull back. So if the market can go above that, that might be bullish. So I'm still waiting to see whether the market can eventually move above that level. For now, if the market gets back there and finds resistance, it will be trouble. The one thing I forgot to mention on the Nasdaq weekly chart is, to me, it looks like right now we need to watch this weekly closing high there of 17,958 on the Dow. If the market can move above that, it's gonna be week number 4, and that's gonna be good to push this market to all-time highs. So a breakout above the all-time weekly closing high at 17,958.79 is going to push this market to fresh all-time highs. Is that possible? Yes. On the weekly, draw a straight line connecting the prior lows there, and these prior lows were formed once we connected this line and this line. Since then, the market has been bouncing on that line. So this is something we've been watching. Those of you who follow me know this has been a level where we've been watching with interest. Every time the market has come back here, we've decided to go long based on that analysis. And you can see for this week, with a surprise positive close, the market did finally hold that line, and that is indication of strength. So we can conclude that very easily if you can draw a line on your chart on the weekly RSI going back a couple years. As long as the market is bouncing and holding above this line, the market is bullish. No need for anybody's opinion. You don't need that. So just draw a simple line. Anything above that, bullish. If the market breaks below that line, then now you have a reason of being bearish. So a break of that line is a reason reason to turn bearish, but as of right now, the market is bouncing on the line, so we have to conclude without adding too much confusing and competing ideas that this is where the market is finding support. So more than likely the market is due for a bounce. Again, watch that 17958 level, because if it breaks out, you probably do need to stay long, because that's a good breakout after 2 weeks of rest after that recent weekly closing high. Let's go back to the Nasdaq weekly. I forgot to mention that the Nasdaq has been down 3 weeks since this high, so watch the level of 4,791.63. A breakout above this weekly closing high is going to be good to generate another push in the market to all-time highs. So watch that. 4791.63 is the level to watch. You can set a trigger for that. If we take a look at the transports daily, we see that we held the 50-day moving average, which is a good sign. And the last couple of times when the market has come back to the 50 and held very well, the market did move higher. All this time when the market held the 50, the market has generally had a nice swing to the upside. As we can see, we were expecting this line either to be broken for a bearish move or for the market to hold, and it held. Once that held on, I believe was the end of Tuesday, we suspected that the market could be spiking to the upside, and we did get that move higher. So that's one view, and that view again is just this simple line here. This simple line has been very good. You can see uniform activity back above that line has been buy signal. Uniform activity back above that line, buy signal. Uniform activity there, buy signal. Uniform activity there, buy signal. Uniform activity there, buy signal. Uniform activity, buy signal, and uniform activity as of this last couple of days, and you have to play the long side. That's the transports daily. You go to the transports hourly, and here again we are drawn a simple line like that. We talked about support if the market can hold, and it's been holding on this line. Every time it snaps back above that line, and here it held above that line. Yes, the magnitude of the move higher was sharper than anybody could have predicted, in my opinion, but the technicals were telling you that support was holding, and so to expect a move higher. And while the market kept making these lower lows, you can see the RSI stayed flat, which was really a way of telling you that the internals were good. Go to the S&P 500 weekly, and we see here that the level to watch for a breakout on the S&P 500 is 2075.37, which is the all-time weekly closing highs. We've had 2 weeks of rest since then, so the market is ready and primed to move higher. Once you have 2 weeks of rest after a closing high on a weekly, any breakout after that means that this is a fresh move. So watch and set an alert if you'd like for 2075.37. If the market moves above that, boy, there could be even more upside. Now, I want to draw a very simple line here, which we're connecting the prior highs, and extend that line because there's some hidden information on this line. So this line connects this high through this high, and it gave you a breakout entry. We show that it gave you a breakout entry beginning of 2013 here during this nice breakout, and since that breakout the market hasn't looked back. We've been grinding higher. Very good move. So we take that line and extend it, and it's this line, the blue line here. What I'm getting at is every time the market has come here with uniform activity, the market has been an absolute buy. Uniform activity below the line and back above it, the market is an absolute buy. Uniform activity below that line and back above it, the market is a buy. Uniform activity to the line and back above it, market was a buy. Uniform activity to the line and back above it, the market was a buy. And you get what I'm saying here. Another instant there, market was a buy. uniform activity below the line and back above it. Nice V-type uniform activity. The market was a buy here in October, and we see that as of this week that has held. So of course, without adding too much, the market is a buy. It doesn't matter what anybody's opinion is. The market is just saying it's a buy. End of story. Until that line breaks, and it hasn't. Once we see a break, then maybe we can change our opinion. Go to the S&P 500 daily, and we see that the line I talked about for the last line of defense held, which is very good if you're a bull. And also it held the other line, which has been on the charts for a while. Both instances, you got uniform activity back above those two lines, and there you have it. That's why the market was up. This 2 days nice move over the last 2-3 days is because the RSI moved above 50 on that S&P 500 daily chart. S&P 500 hourly, this is where you start seeing some signs of, maybe the market getting tired. You can see there was a break of this channel. That break point was there, draw a straight line. The market is struggling to hold above that. Just like a prior chart, anything above that is bullish. Anything that is confirming resistance and is trading below that line is bearish. Also, even though we have to be careful with that type of analysis, if this is where the market has been stalling on the hourly RSI here, you're using a period of 21. So I use different settings just to give me different look and feel. But here, if the market stalls with that line, the last time we stalled was the actual high, this high here. So if the market finds resistance here, then maybe we can start looking for a reason for the market to go down. The one thing I do note, and I think it's important to highlight this, is this line gave us, we had this line on our charts while the market was making higher highs here. The RSI was making lower lows. So our suspicion was the market would go lower, and we got that move lower. So no surprise. So all we need to do is keep the same line and extend it like that. So here is what we can do. We can conclude anything above that line is bullish. And so that's the confusion, is we have the market moving above the prior negative divergence line, which is bullish, but yet we've come back to where the RSI is stalling. So my thinking is I would rather make the mistake of going long until we get a pullback in the market, because the weeklies are strong, and as I will discuss later, the monthlies are also strong. Okay, let's take a look at one stock. As I always do, I always take a look at Apple, because a lot of people follow it, and take a look at the daily. And on the daily, we can see that if we draw a straight line connecting the lows of summer of 2013 and the lows of early this year on the RSI, and draw a straight line, you can see that the market has bounced on this line with uniform activity once before, which was this nice entry point. We see here uniform activity below the line and back above it, which is this nice entry point over the last couple of days. Also, the market is holding the 50. So Apple continues being a good stock in the sense that it is holding firm where it needs to hold firm, and the 50 is holding. We got support coming from this trend line also, which is good. There's also another line on the RSI connecting the prior highs here and here. The market had broke out above that level, which is this nice gap up. So that gap move there began a very nice trend in the stock moving higher. Now all we have to do is extend the nice line that gave us a good buy signal and extend it. Without failure, every time since then, Apple has been using this line for defense and a reason to bounce higher. Every time with uniform activity. Hope you don't get tired of me saying that, because that's important. And here, uniform activity below the line and back above it, entry point, and even here it touched that line with uniform activity and bouncing. The other thing I want to show you is that on the daily, the market, as far as the Nasdaq is, the Apple stock is concerned, looks poised to move back above zero as far as the main MACD is concerned. So that MACD, if it can continue holding above zero and bouncing off the zero line, that's pretty much very bullish. So I would think that's the case. Also, there's another argument that can be made that maybe the market trapped itself, and this shows it very clearly. If we take the lows, or the RSI line connecting the lows, you can see that that line connects all these lows, all of these lows, and even as of right now. So we can conclude that if the market is above this line, that's bullish. If the market, for some reason, because markets can do whatever they want, if it breaks that line, especially in the new week, then that's bearish. So that's a very easy thing to look for. Either we are bouncing on the line, which is bullish, or we break that line and we turn bearish. Let's take a look at the Canadian market. And had a nice snapback rally, up 5% after being down, I think, 5 or 6% the prior week. So whenever you see a market doing this type of action, it's generally not the most stable market, in my opinion. We've come back to the declining 10-week moving average. Remember last week we talked about the bearish crossover between the 13-week moving average and the 34-week moving average, and that could be long-term, indicating a move lower. The last time we had a crossover was bullish, with the 13-week moving average moving above the 34-week moving average. So maybe here we are looking at a market that, yes, is trying to recover, but I'm not sure it's good enough. Also, we can see that there was a break on the RSI line. I guess we can draw it from like that. There was a break here of that trend line on the RSI, which was this move somewhere here, and the market had a plunge of some sorts. Now if we draw a straight line since then, you can see that the market is telling you how to use this line. When we're above that line, the market has a nice move. When we move below the line, like here, the market drops. Now, so we can say that if the market continues holding above that prior break line, and the break line can be drawn from here, anything above that, like it's doing right now, is probably okay. But if the market has a bad opening to the new week and drops like that, that's bearish. Also, notice that this declining 50-day moving average could very easily become resistance. So, if I take a look at the hourly, this is where you see some signs of weakness or possibility of weakness, because RSI had broke down, and that connects, this line connects the lows and through here. So something like that, and that break corresponds with this move some on the 24th, so corresponds with that move there. Since then the market had this significant drop. If you draw a line from there, you can see that if this market coils down below that, that's bearish. Now let me adjust this line slightly, because I see there could be another way of drawing this, which is just connecting this low and this low. And that break again just before the 24th is this break, this high. So that was perfect entry on the way down. If you're short, draw a straight line from there, and you can see that this is also showing resistance on that Canadian market. So maybe on an hour-to-hour, day-to-day, Canadian market is, in my opinion, a little bit suspect. Now I want to show you the most bullish chart. In my opinion, the most bullish chart is the VIX, because the VIX looks very bearish. So this is the strongest reason, in my opinion, why the market should go up, or can go up, or could go up, is the line that we've had on the charts over the last couple of years. And this line has been very successful in telling you when to go short the VIX and long the market. We've been breaking down here, go long the market, double top on the hourly, on the weekly, go long the market. The VIX stalls there on the line, go long the market there. VIX stalls there, the market is a buy. Again, resistance on that line, the market is a buy. Resistance there, the market is a buy. Uniform activity above the line, back below it, the market definitely is a buy here in October. And we can see as of the last 2 weeks, we've come back to the line with uniform activity, and we've seen resistance. All that tells me is that this is a broken chart in terms of the VIX. The market should go higher. We take a look at the VIX hourly, actually on the VIX daily. And without disappointing, or I guess with some disappointment depending on which side of the trade you are, the VIX has just been unable to hold any sustained move on the RSI above this line. This line has been on the charts for a long time. This has been on my charts for the long time, and it very easily gives you sell signal on the VIX, buy signal on the market every time. This has been a very good timing tool for when the market is a buy after some pullback in the general market. Uniform activity above the line, back and back below it with a double top in the middle. That's a high, the market is a buy. You see here uniform activity above the line and back below it, the market is a buy, the VIX is a sell. That's one view. The other view is finding out where this move failed, and the move failed when this line broke down. So the break there around 69.1, draw a straight line, and you can see we've gone above that line and back below it with uniform activity, suggesting that the VIX was a sell many days ago and the market was a buy. Okay, so I want to conclude here with a quick look at the Nasdaq. Actually, let's go back to the Nasdaq long-term monthly view. And on the Nasdaq long-term monthly view, the market somehow has figured out a way of holding above the 2000 monthly closing high of 46.96. So early in the month we were below this. It looked very bearish for the market, but by the end of this past week the market is back above 46.96, which is good. And as long as the market is trading above the 2000 monthly closing high of February, this market is breaking out, and the breakout looks okay. If the market again does finally move back below that threshold, then maybe we can go short once more. So go back to the monthly chart for the Nasdaq. You can see it continues holding above 69.1, which is surprisingly after this drop, but it's above 69.1, which is very good, very bullish. Go to the Dow monthly, and the Dow monthly is back above 69.1 by the end of that week. Very powerful, absolutely powerful. Got to respect that. And we look at the S&P 500, by the end of the week was, through some magic, back above 69.1. This is a market that is very strong, so you have to be careful. I've been saying, if you're going to make a mistake, until we see a 1% down week or 1% down day, you have to remain bullish. Eric Mwade. The rest of the video is for subscribers. Good luck, peace, and blessings. Woo!